All right, guys, welcome back to another episode of Sky's the Limit podcast. I'm your host, Mike Doherty, and today we have an awesome guest. We have Nick Gonzalez from Winston-Salem, North Carolina. Him and his partner own a very successful brokerage and investment fund called Linville Team Partners. They just got done wrapping up another successful year, closing in $60 million of real estate in their fund. Nick has a lot going on. We caught up before the show started here for probably another 20 minutes. Really interesting fella. And I produced a feature film, went to school in Barcelona. He's got an amazing journey. So with that, Nick, welcome.
Thank you, Mike. I'm happy to be here.
Yeah, no, thank you for the time today. So why don't you have a really interesting life. I'm sure a lot of people, can't empathize with that, but would sure like to listen and hear your story about how you grew up in Barcelona, then moved to Miami, and now you're managing a $60 million real estate fund. That doesn't happen overnight. So I'd love to hear how you got started and kind of where you guys are going now.
Yeah, it's funny. I was thinking about that this morning, and even just in talking to you about it just now, it's like I feel like I'm reliving it right now as we're going through it. But yeah, my journey in real estate started in 2009. I went to film school. I studied film producing here in North Carolina, which is my fun trivia fact that I shared with you. I produced a feature film in 2017. Yeah, I got my real estate license in 2009 while I was in my fourth year of school. I had grown up around real estate to some degree. My family has had ups and downs in development, and lots of successes, and had been through several cycles, both good and bad. And I had basically seen everyone just running out of this burning building that was like the global financial crisis, the foreclosure crisis here, and you couldn't even give real estate away in 2009, 2010. And of course, my first thought was like, oh, this is a good opportunity to get involved in brokerage, get involved in investment. And I was really lucky to have a really, really great mentor. My first mentor in real estate, I basically cold called him off a Zillow ad. And I was like, hey, it looks like you know a lot about like duplexes and quadplexes, and you have like an apartment complex listed. Like, can I take you out to lunch? Like, I kind of know a little bit about real estate, but I don't know a lot. And I think he was just like caught off guard. We went to lunch. I learned a little bit about investing from him. He was like, oh, read Rich Dad Poor Dad, read this book, read that book. And I was like, I think I'm gonna get my real estate license. Like, what you do seems like fun, and I want to start investing, but I don't really have any money. So he was like, okay, yeah, sure, pal. Like, good luck. And so I think like 3 months later, I called him back and I was like, hey, I got my real estate license. I read all the books he told me to read, and I want to buy my first rent house, but I can't get a loan. Like my last job was at IHOP, and on my tax returns, I made like 12 grand last year. So what do you recommend? He was like, well, you might be able to get a private lender to help you get a loan, but it's going to be at a high interest rate. You're probably going to be paying 12, 14, 16%. But yeah, there's private lenders out there who can help you. That's my advice. So sure enough, I thought to myself, I was like, okay, well, who has disposable income that could be in a position to help me? And my first thought was like, well, attorneys make good money. Maybe there's an attorney in my town that would be willing to do a hard money loan to me. Again, this is like I didn't even really know what hard money was at the time. Like I just was looking for a private loan. So I called every attorney in like yellowpages.com, and they were a few of them were open to like maybe doing it, but it was really sharky and like didn't have like a great vibe to it. So I pulled up after making probably like 50, 60 phone calls, I pulled up the list of attorneys one town over. And there was one guy whose name kind of like he had like a very like well branded, like his name just jumped out. It wasn't like first on the list, it was just halfway down. And so I called him. I gave him the elevator pitch. I was like, hey, here's my background. Here's what I want to do. I want to buy a rent house. I want to fix it up. There's great deals everywhere right now. Here's why you should take a shot on me. And his name was Norman. Norman Sloan. He's passed away now, unfortunately. But he goes, I don't think I want to do that. But my parents might be interested in doing that. And sure enough, I went out to lunch with him and his parents, who really I think were just like intrigued. And they ended up doing my first loan and probably like four or five others after that for like flips and rentals. And it ended up being a great relationship. And like ironically, now I also do some lending as well. But at that time, primarily like I had four or five people I just kept going to for private loans for flips and rentals. So I got my start that way. And when I say I got my start, I mean I was also doing brokerage, but this was like the Wild West. I mean, 2010, 2011, 2012, like you could get a house for 5 grand. Like banks were listing foreclosures with me and my partner at the time. Uh, like they'd tell us, hey, sell this house for 20 grand and your brokerage commission is going to be 1,500 bucks. And so, I mean, there were great opportunities everywhere. But every time I made a commission check, I just went out and bought a rent house. And that's where I got my start. And I know you guys have a lot of multifamily and rentals, and that's where I really cut my teeth was single family rentals and multifamily, and then eventually, mixed use and self storage and car washes. But both, as a broker and as an investor, what a learning opportunity to come out of the great financial crisis. Like I tell people, it's almost like you're like the medic that goes out onto the battlefield like 2 days after like some huge like battle went down, and you're just tending to the survivors and being like, wait, like what happened? Like where did they shoot from? Like what did like you're piecing together this like post mortem of this like economic apocalypse. And I mean, it was such a learning opportunity from all the people who had just come out of this, and you're kind of like fresh and green and just a sponge, and like what not to do and like how not to maybe hopefully make those mistakes again. um but yes, I cut my teeth on residential brokerage till 2013. Was really lucky to have another really great mentor in my current partner, Aubrey Linville. I started doing full time commercial brokerage with him in 2014. We started investing together in 2017, where we became essentially, partners in the brokerage. And then, yeah, that led to our fund, which we launched at the end of last year. And we, as you mentioned earlier, we've closed on $60 million worth of real estate in the Southeast this year. But we've really been doing it for 7 or 8 years now. We just never really called it like an investment platform or investment services. Like we were really just passing the hat around to like friends, family, and clients who wanted exposure to really, really great real estate, but they didn't want the headache of direct ownership of that real estate. And they kind of knew that we were people of integrity, and that we operate really transparently, and they know us, they trust us. Most of what we're finding was like off market, or you know I was getting ready for this, I was listening to a bunch of other podcasts too, so I would like maybe sound more intelligent. And I don't remember who said it, but somebody said something that was like, real estate is the only industry where like insider trading is actually like encouraged and totally ethical. And it's actually really funny when you think about it, because like like the best brokers have a dozen pocket listings. They like know something nobody else knows about that one listing, that like that they got to call their 3 clients and tell them the secret before like somebody else finds out. Like the
Yep.
best brokers really are like quote unquote insider traders, but in the most like ethical and wonderful and legal way possible. um
Yeah, it's crazy how many, you're a broker in the commercial world, so you get it. The amount of clients I work with that would like to sell their portfolio off market, direct to a buyer, don't want to list it, don't want to bother tenants in the multifamily game, and It's like, yeah, I understand that I own multis and I don't want to bother my tenants either. But, if you do list it on the market, it's the high, I only know so many people, right? Like I can network it off market, but you have a greater chance of getting the most amount of money on market. No, 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 just sell it off market. And in that case, okay, yeah, I will go to, the people I know can close it. It's just so funny the world works that way. But no, congrats on all your success going from working at IHOP to now,
Yeah.
closing 60 million in real estate in a fund. Obviously that doesn't happen overnight, and you really cut your teeth in the smaller multifamily, then graduating to commercial, dabbling in some different asset classes. So it sounds like you've done some car wash or some self storage. Out of all the different asset classes you have experience with, what do you think you come back to the most? Is it multifamily? Is it what do you like? What do you find the most success in?
That's a great question. I think I probably would have given you a different answer, like every 3 or 4 years of my life, because you just like keep learning more and like evolving. So definitely, would be my current answer would be industrial and retail. And I would also say that my current answer would really, really depend so much on like geographical location as well. So I know you asked about like asset type, but I would say like depending on the location, I'm almost like agnostic to asset type. I loved single family and multifamily, but I would say I 6 or 7 years ago, I've developed like the opposite of love for single family and multifamily, only because like it is high touch. And even if you have a really, really great manager, I started and sold a property management firm as well, that did multifamily property management. And so even if you have a great property manager, you're still micromanaging the property manager to some degree.
Yep.
Um, and the really great thing about single family, multifamily is if you have a diverse portfolio, like you're never 100% vacant. You're never even 30% vacant or 20% vacant. And even if you are having vacancy issues, like okay, we'll run a promotion, drop the rents $50 a month, do free internet. Like there's so many ways you can control your destiny on single family and multifamily. But ultimately, I think like I just kind of got worn out with like the people aspect of it.
Yep.
And it's funny because like people ask me about like we have the cap rate discussion a lot. People are like, oh, like what do you think people misunderstand about cap rates, or like what cap rate do you think this should be at? And like one of the very first things I think about when I think about a cap rate is like, well, how many human touches are involved with this, right? Like on multifamily, I have 144 tenants, and like they have like spouses that may break up with them and they want the locks changed, or like someone lost their job, or like someone came into like somebody had a bad day and they beat up their neighbor. Like I'm not thinking cap rate like what's my return on investment. I'm thinking, okay, what's my return on investment multiplied by the people element of it, right? I have a tenant who's a dentist, and I hope he's not listening because I haven't heard from this guy in like 7 years. I get the rent
Yeah.
check every month. There's zero drama. He makes great money. He pays us a tiny sliver of it in the form of rent. And there's like maybe five things in his medical office suite that could break if they ever break. And 9 times out of 10, it's gonna be easier for him to fix it than it is for him to call us to fix it. Um,
Oh, could not
so
agree more.
yeah. So I would say
Yeah.
like, retail and industrial is like a really nice balance between return on investment, return on involvement, return on time, and just the amount of like how high touch is it going to be?
Yeah, I think for those listening, I don't think anyone just getting started in real estate will go right into like a triple net lease, retail, plaza, or single tenant retail, or even an industrial building for that matter, just because a little bit more complex. You have to have a good amount in reserves because at the same token, yes, it's the least amount of headache and you can self manage it. And, you're dealing with one business owner. But at the same token, if it goes vacant, it could sit for 6 to 9 months. So you better have reserves, and especially if you're, raising any money, for that asset, you just got to have reserves and you got to have experience. I think multifamily. That's why it's so powerful. Is if you have a four family and you have one, unit go vacant, you still have three other forms of income coming in to pay for that mortgage. And if you ran your numbers right, that should still cover the mortgage, right? You're always going to bake in for capex, maintenance, repairs, vacancy, but I think that's why multifamily in two units above is kind of foolproof in a way. Everyone always needs a place to live. Depending on I think the more commercial is more of a factor in the economics play a factor in that more so than in multifamily. But just like you, I mean, I have a Ryan and I at Skytree, we have Trinity Health is one of our tenants. It's a multi-billion-dollar, you know, hospital essentially, and they have a sub office, and it's our office. We own the building, and we haven't heard from them in months and months and months. Meanwhile, I own a four family and got a call because the smoke detector battery was out. Right? It's just like it's funny the type of stuff you get, but I think there's a time and place for it all. But it sounds like I do, a lot of these podcasts and people do graduate, I'll say graduate on up to the retail, the industrial, and A class type retail. So, but there's a part in it for everyone. So, I'd love to talk to you before, we went live here. We were talking off camera about doing cost seg studies, and I have a note here written down, and I thought what you said made such a great deal of sense, right? So for those out there like you and I who are quote unquote to the IRS full-time real estate professionals, meaning we can carry forward losses in excess of, I think it's $25,000 is the limit if you're a W-2 earner, right? So with that, you can just be a little bit more liberal in your losses, and still stay above board. But you had a really good point about, or I had made a comment saying, what if you want to get a loan, you want to show some sort of income, and you made a good point about what you do with your accountant at the end of each year. If you don't mind going through that, that'd be awesome.
Yeah. So I always try to think about like, okay, well, what can go wrong? Like, what assumptions am I making that like I take for granted that I could just be assuming something over and over and over again, and it's just been wrong this whole time. And one of the things that I kept hearing over and over and over again as a broker, as an investor, as a borrower, applying for loans, people would be like, "Oh, don't worry about depreciation. Like the underwriters just add that back in when they look at your tax returns for purposes of lending you money to buy real estate, whether it's your house or an investment property or whatever." It was like, "Oh yeah, like don't worry about the depreciation. They'll add that back in." And I mean, it was probably like 2020 or 2019 where I kind of sat down and thought to myself, I was like, like I don't know who's this underwriter like 3 states away that's looking at my tax returns and looking at all these K1s and deciding like, in certain LLCs, depreciation will show up as like a net operating loss. It's not like very, very evident and like super clear and transparent that, hey, this is a paper loss, right? This is a I don't want to call it a loophole, but this is a benefit that we're getting as owners of real estate that's not a real true expense. So when you do a cost seg study, and you just had a guest, I think, who elaborates on this probably better than I can. But essentially, instead of taking your straight line depreciation, you're finding bonus depreciation that you can accelerate. And so, by way of example, uh, we purchased a $19.5 million shopping center, and we did a cost segregation study that found $4.8 million of bonus depreciation that we wouldn't have gotten otherwise. And so that 4.8 million is a loss to the ownership group that will offset income, which in turn means that you'll send less money to the IRS, which is great. Uh, what I have done, and this is inexpensive and great advice, is I went to my bookkeeper or I went to my accountants and I said, hey, every year when you finish my tax returns, can you please write a really intuitive letter, cover sheet that says, hey, these are the tax returns for Nick Gonzalez. By the way, these are all the LLCs in which either bonus depreciation was captured or if there's anything else going on with them. that should be called attention to, but it's very, very like not like an accountant wrote it. It's like almost like a narrative story. Hey, we just got done filing his tax returns. Here's a couple of things you might notice. Boom, 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 boom. If you take all of that into account, Nick's adjusted gross income this year would have been X. Thanks so much. Call me with any questions. Signed by the accountants. I'm telling you, like I think it's made a material difference because they're forced to look at it before they even open up the tax return. And so even if they would have come to the same conclusion before, it gives them the guardrails to say, oh, okay, there was this amount of paper losses that we need to give him credit for that as income for borrowing purposes. Um, I think people take for granted that, like, I mean, I have clients and investors that are, you know, very, very high net worth, and like it takes somebody 2 weeks to get through their tax return. So like, oh yeah, like they'll add it back in, and it's like, well, I'd rather err on
Maybe.
the side of caution. Yeah. So for $50, hopefully that's something you do,
Yeah.
your listeners can do, because it's why wouldn't you do that?
Yeah. No, I'm definitely going to take that golden nugget and use it this year after I file taxes. And I'm actually doing my first. I think we're doing the cost seg analysis on 12 of our properties. What's cool about the cost seg is that you don't have to utilize them all in 1 year. So maybe this year I have a higher AGI I want to bring down. I can tap into 3 or 4 of those cost seg studies and leave the 7 or 8 on the back burner for another year. It's you're playing matchmaker. You're just what do I want to show as my AGI this year, and do I want to tap into those cost seg studies? So it's cool. So actually, Nick, if you don't mind, you talk about your fund for a little bit, and maybe the nuances of the fund, and how that differs from syndication or syndicating, because a lot of people that come on the show are syndicators, and obviously there's merits for syndicating and being a part of those, but not many people have their own fund. So maybe talk about the pros and cons to fund versus syndicating, and how yours is structured.
Yeah, we're kind of in a unique category, and it's by design. So I think legally, what we have is like a customizable fund model. So it's a bit of like a hybrid between syndication and what most people traditionally think of as a fund. And so the easiest way to explain it is uh, we we are investors. We find great opportunities, and we want to share in those opportunities with the people that invest alongside us. So that's kind of like one almost like immediate differentiator, because a lot of syndicators and fund managers find great opportunities, they make fees from finding great opportunities, and they raise money with which they can buy those opportunities, but they don't always really materially participate in those deals. And that's fine, but that's not what we do. We put a considerable amount of our own capital into every single deal. And in pretty much every instance, we also sign on recourse on bank debt on behalf, just us on behalf of our LPs, so on behalf of our investors, so they don't have to. So we get more favorable terms. So we really are kind of like your true partners in the deal, which is not always the case. Sometimes it is, but it's not always the case. What makes it a customizable fund is, generally speaking, we want our investors and our partners to be in our ecosystem first. Hey, get to know us, make sure you feel comfortable with us. We don't really want your money right now. We want you to kind of know what we're about, what we're doing. And as opportunities present themselves, we will pitch you those opportunities, at which point consider investing with us. And that's not like a groundbreaking, crazy difference, but a lot of funds do set out and say, hey, we're raising $20 million and we think we're going to buy industrial properties in the Southeast. And they'll either proactively raise money or they'll proactively get commitments without necessarily having a plan entirely in place. And then, you're a broker, I'm a broker. Like, I've gotten those calls where it's like, hey, there's 6 months left in the year and I still have $5 million I need to deploy. Send me any deal you have that meets this criteria. And that's kind of like a conflict of interest, right? Like, they're under pressure to deploy money that they've already raised. And guess what? Like, it might not necessarily go into the best deals possible. Sometimes it does, sometimes it doesn't. So I think what's really, really different about us is that Aubrey and I are materially, significantly participating in every single opportunity, and we are very opportunistic into what we feel like doing, right? So we're not bound to hyper specific criteria. Right now, we're really only considering opportunities in North Carolina, South Carolina, Virginia, and Ohio. But that's a deliberate choice because those are four states that we're very, very bullish on. And we're pretty open minded to what kinds of opportunities we take down. So, again, what's different about us is we're not just raising a bunch of money to then spend it, you know, later. And we are participating in these deals like pretty materially every single time. So again, I think when most people think about a fund, they think about the fund model that's a little more, hey, we'll raise the money and then we'll tell you what we did with it later. Um, I'll point out kind of like the third key differentiator too that I I didn't realize until maybe 2 months ago is actually like a very, very big differentiator. Aubrey and I typically only target opportunities where we're making quarterly distributions immediately. So when we underwrite our deals, and every single deal we've closed on so far this year, we've closed on our ninth deal today.
Oh, congrats.
Thank you. Yeah, that was a bear, but great, great opportunity. Um, we're really focused on cash flow, and what we've come to find, and again, like we didn't really think this was a big like value proposition here. But there's a lot of funds where like you're not going to get distributions for a year, 2 years, 3 years. Like the majority of the return on investment comes at the very end. They're like, hey, we're buying this for 16 million, and in 5 years we think we're going to exit at 21. And the majority of your return on investment banks on that assumption. We're actually, I mean, we're buying deals that cash flow day one. Oftentimes cash flow like pretty significantly day one. Um, and we're making quarterly distributions to our investors of, at least their pref, and most times their pref plus their profit share. And so again, like the thought hadn't really occurred to us, but we had an investor dinner with 30 folks that came out, and two-thirds of them have invested in funds before. And we asked them, like, well, what's your feedback? And they're like, well, my feedback is like, I invested 2 years ago and I still haven't gotten my first distribution because it was like, oh, our plan is we're gonna reposition the property, we're gonna lease it up, like it's a big value add, like we're buying an empty industrial building and we'll start paying distributions once it leased. We're not chasing those kinds of deals. We want stable, steady cash flow with upside, and those are really, really hard to find. But like, yeah, we work really, really hard to find them. So yeah, those are some of the things that make us a little bit different.
Nice, awesome. So yeah, that makes sense. So you would say in your case that the deal you're getting people to know, like, and trust you to begin with, and then but you're not taking their money until you have a deal, essentially. Yeah.
Yep.
So compare that to like a REIT fund. Um, you know, you go buy a mutual fund and you're buying a share of of whatever they're holding, and you're getting the distributions, but you're not. It's very if I'm investing with you, I'm investing in the specific deal, so I either like the deal or I don't.
Yeah, you're
Yeah.
basically getting under our umbrella where you get exposed
Yep.
to all the deals that we're doing, but you're not having to participate in them if you don't want to, and you're getting to pick and choose, which is great
Awesome.
because
Yeah.
we have folks that invested in deal one, four, and nine. We have folks that invested in one, two, three, four, five, six. But it ultimately, if it passes our test, we're going into it knowing we can close on it no matter what. But then opening it up to everybody
Yeah.
so that they can
Yeah, it makes
participate.
sense. I like
We
it.
also we also have a $50,000 minimum, which I didn't realize was also a bit of a value proposition. Because a lot of other real estate, like the barrier to entry in a lot of funds and syndications is usually like 100 to 250 minimum. Um, we just want good partners who, like, whether they're putting in 50 or a million. We're not that concerned about
Yeah,
how much the amount is.
makes sense. So, we're approaching that 30-minute mark. One question I do like to ask all of our guests is, how do you structure your day? also, your kind of your mindset. How do you, obviously, you're running a very successful brokerage and investment fund. Is there any, anyone you follow, any books you read? But first, how do you structure your day from the time you wake up to the time you go to bed? Do you dedicate certain hours in the morning to doing like personal goals? Or I'm just curious about how everyone's, how other successful people's day looks like.
Wow, what an opportunity to just lie about my
And you could tell this isn't scripted because you had no idea this question was coming.
I wake up at 3:30 a.m.
Yeah,
No,
right.
no, no. I really do not have a terribly well structured day. However,
That's okay.
uh, yeah, I will say there's so much value. I take for granted how much muscle memory I have. So, like, even though my days are not structured, I have so many systems and processes in place that allow me to be hyper efficient, even within this loose like framework. I would say that's really important. Like your ability to function is this like muscle that you just have to keep training. And so like I train a lot of our new brokers, and like it's hard to juggle three deals at a time when you're a new broker because you don't have that muscle memory and like that depth of knowledge and experience. But once you've closed 1,000 transactions, like you can have 50 listings and be servicing them really, really well. And like you just take for granted some of that stuff. So how do I structure my day? Yeah, I mean, like on Sundays, I'll plan out my week ahead and I'll try to have like rigid time blocks where I know I'm dedicating specific time to specific tasks. Half the time that system does not work, and that's okay. Um, but I would say like if I had to give some like advice or secret sauce or whatever, it would really just be the people. Like whether you're an investor, a broker, fund manager, like you have to always set time aside for just like face to face and people time. I'm so lucky. Like I'll give you a very quick story. Two of my best clients, not only are my best clients because I've closed 100 transactions with each of them as a broker, but one of them I was a groomsman at his wedding. Like the other one, I sat next to him at his daughter's wedding. Like those are like probably two of like my most proud like professional accomplishments, and they actually don't really have anything to do with professional achievement, right? But when you're in this line of work, like we're not engineers, we're not designing bridges, we're not like building widgets. Like I've had clients pull me into deals because they know me, like me, and trust me. And so I think like you have to constantly remind yourself that it's a people business, and
Right.
you have to constantly be putting yourself out there and spending time. Like I can't tell you how many people it's like, hey, I want to grab coffee with you because I just want to pick your brain about brokerage. I want to pick your brain about investing. Can we do a quick phone call? Can we do this? And there's times where that can get like kind of exhausting, but like you're paying it forward. I had great mentors, so like I owe it to them to pay it forward. And you take for granted that like I I might get a higher return on investment spending 30 minutes with someone who's getting their start right now. That could turn into my next deal 5 years from now or 10 years from now because I was the one person that like treated them with kindness and was like generous with my time. So I would say that's the key thing. Like if you're not planting seeds every single week, day in and day out, building new relationships and strengthening, turning your weak relationships into strong relationships, nurturing your strong relationships, and opening up new ones, then you're missing out because that is the single most important thing in this business is
Yeah.
your network and the people who you've been kind to, because they'll keep coming back for they'll keep coming back years and years and years. Uh,
Yep.
you know,
100%. I mean, it's a reason why I was just saying your network is your net worth, and it's 100% true. And people like to do business with those that they know, like, and trust. Bottom line, very simple. You don't have to be an MBA grad or some successful doctorate to figure that out, right? I mean, it's a people's business, and I think that all goes back to what we were talking about again off camera. I feel like we had a podcast in a podcast.
Yeah.
About working in the service business, and when you're interviewing people for your brokerage, you ask them, like, where did you work in high school, and did you play any sports? And like you said, you don't attribute one doesn't equal one plus one doesn't equal two, but you just like to know, like, are you a well-grounded person? Can you handle objection? Can you handle different scenarios? And a lot of people that work in the service industry generally can, especially if you're growing up doing it. So no, I really appreciate your time today, Nick. Congratulations on all your success. For those that want to learn more about your fund and more about what you're doing at Linville Team Partners, we will link your website in the show notes. We'll link your email, and people can reach out with any questions. So,
Yeah, and I'm very accessible. So again, like reaching out to me directly, checking out our website, like everything's out there. We operate really transparently, and I'm only ever like a phone call or an email away. So I
perfect.
appreciate it.
Awesome. Thank you again for your time.
Yeah, thank you. I really appreciate it. Great chatting with you.
Thank you for watching Sky's the Limit. We're always releasing new real estate content, so if there's something you want to hear, be sure to leave a comment. And don't forget to subscribe to our channel.